Hey friends, welcome back to the channel. If you're new here, my name is Sunny and I'm a real estate investor based in Northeast New Jersey. On this channel, I share my experience as a real estate investor in an effort to help you start or grow your real estate portfolio. Today, I'm going to share how I buy real estate using none of my own money. There are three main points that I want to make, so let's dive right in. The first point I want to make is I have a strong personal financial statement. My assets far outweigh my liabilities, my income exceeds my expenses, and I try to have a strong cash position at all times. I'm not saying this to brag, I'm just saying this to let you know that I'm not that person who started investing in real estate with absolute zero. Now, there are people who claim to have done that on the internet. I'm just not that person. With that said, whenever I apply for a loan to buy a new property, my first move is to send my lender my personal financial statement. Letting a lender look into my financial position gives them comfort and confidence when lending me money for a new deal. Based on my numbers, they know that I can service the debt personally if necessary, and if I default, they have substantial recourse. If you want to download a copy of my personal financial statement template, click the link in the description down below. So at this point, you might be wondering, if I have money, why do I choose to use 100% financing to fund all of my deals? Wouldn't it just be less expensive if I put my own money into the deals? The short answer is yes, it would be less expensive. However, the long answer is it depends. There are three factors to consider when allocating capital. The first factor is running a tight ship. Now, borrowing money from other investors is a pretty big responsibility. I can't afford to make a mistake in my underwriting or in my business plan execution. Otherwise, I'll have to come out of pocket and eat any losses. In my experience, when you use your own money to start funding deals, you let your numbers get a little bit sloppy because you're less concerned with paying yourself back than you are with paying an investor back. The second reason I like using other people's money is because it lets me do more deals. My money is finite. I can only go so far if I'm only willing to use my own funds. However, if I raise money from other investors, my bottleneck transitions from how much money I have to how many deals I can find. The assets that I typically buy are in that $500,000 range. So let's say I had to put 15% down just to buy that property. If I were to use my own money, it would cost me $75,000 of my capital on day one. However, if I raised that $75,000 from another investor and paid them 8% interest, that would cost me $6,000 over the period of an entire year. The third reason I like using other people's money is it helps me build my authority and my network while providing investors with a lucrative opportunity. I usually pay my investors anywhere from 8 to 10% interest depending on the project. And that might seem like a standard return profile, but what you have to remember is when someone invests in a deal with me, they have a hard, tangible asset that secures their money. And that asset is almost always worth more than the money associated with it. For example, I recently purchased a home for $525,000 using 100% debt financing. On the day of purchase, we received an appraisal that said that the property was worth $575,000 as is. Now, let's say I default on that loan and my lenders come and they foreclose on me and they take that property back. They lent me $525,000 on that place. But if they take that property back and sell it on the open market, they can expect to sell it for $575,000. In a sense, it's actually in their best interest that I default on the loan. The third and final point I want to make in this video is probably the only reason you're watching it. It's how do I actually use 100% debt financing to fund my deals? Well, it's a mix of hard and private money lenders. Here's my 5-step process to raising money every time I get a new deal under contract. My first move is to create a pitch deck for the deal. Now, this is a simple PowerPoint presentation that describes the who, what, where, when, how, and why of the deal. It typically includes the purchase price, the renovation cost, the after repair value, and how long it's going to take me to complete the project. The second step is sharing that pitch deck with new and potential investors. I do that through my weekly newsletter. By the way, if you want to sign up for my newsletter, click the link in the description down below. More often than not, people who have invested in my deals in the past will step up to the plate to lend to me again. It's really hard to find a new lender. It's much easier to get an old lender to increase their check size. After I share that pitch deck with my newsletter, my next step is to apply for a hard money loan. I typically apply to 2 hard money lenders. The first one is Kiavi and the second one is Accolend. In my experience, Kiavi is better for investors who have 5 exits or more in the last 36 months, while Accolend is typically better for newer investors. My loan terms with Kiavi are generally 90% of purchase price for 1.9% interest. My loan terms with Accolend are typically 85% of purchase price, 85% of construction at 8.5% interest. Once I know how much money my hard money lender is going to fund, I move on to step 4, which is communicating how much money I need from my private money lender. Typically, my private money lenders fund my down payment, 1 year of working capital, and I might even ask them to fund the construction as well. Once I find a private money lender who's willing to invest in the deal, I only have one step left, and that's sending them my loan package. I typically secure their investment with 3 documents. The first is a promissory note, the second is a mortgage, and the third is a personal guarantee. If you want me to make a video on these 3 documents in detail, please leave a comment down below. Once all of those documents are signed and dated, I get the wiring instructions from my title company and I forward them to my private money lender, and they wire the funds directly to the closing agent. After we close on the property, all of my lenders get their interest on a monthly basis, and then everyone gets their principal back once I sell the property or I refi into long-term fixed rate debt, which typically happens within 12 months. Well, that's all I had for you guys today. I hope you enjoyed watching this video as much as I enjoyed making it for you. If you want to watch more videos like this from me, please click here to check out the video where I detailed my entire investment portfolio at the end of 2021. Finally, I put out a new video like this every single week, so if you haven't already, please be sure to subscribe to the channel. I don't want you to miss the next one. All right, peace.